Good evening. This is the Elliott Wave update for the S&P 500 and the Nasdaq 100 for Thursday, May 4th, 2023. The markets did continue to work their way lower today, with the S&P reaching a low at 4062.25. That basically was touched twice today. And let me just switch it back over so we can see the candlestick chart. You can see it went down, tested it, and managed to break through. And I am switching back over to the candles, to the line chart to show that I'm basically counting this now as the first wave, the first minute wave down. So I'm putting this in as 5 waves. And so I'm counting it as a 1, 2, and then 1, 2, 3. That's 4, 5 of wave 3, and then a 4 and a 5. I know it does not appear, but it does count out even on either style. It's been difficult, but the downside continues to be clean. So again, I know already that it can't be 1, 2, 3, 4, 5, because that would leave wave 3 as the shortest wave, and that just can't happen. So that's why we got to start 1, 2, and this all is the third, and then the 4 and the 5. So what we're now moving up in are the wave 2. And again, just going back out, putting this on the candlestick, we can see that wave 2 has at least initial resistance at 4096. And then 0.382 at 41.17. The 50 is just below 41.16, I'm going to call it. But where we believe, and as Fib relationships go for wave 2, most common would be 50 to 62%. So 50 to 0.618. And then in between all of that, so we got 41.17, 41.34, we've got the 200s at 37, and then 41.51. So once again, we're not getting away from a move back above 4,100 and possibly getting as high as 41.51. Now again, as we've been experiencing with these second waves, they tend to be little powerhouses. They tend to roll and take forever to get to their destination. This is of a minute degree. So I'm going to be looking for it to kind of unroll a little bit quicker than what we have seen. Now, the other side of this coin is that wave 5, that's where it started here, wave 5, still in progress. And what we've done is wave 1 and a small wave 2, a 5, which will put a 3, 4, and a 5 to get us down back towards 40.30 or below. That's also possible. And again, leaving 1, 2, 3, 4, and then we're still within that 5th wave. Right now, I'm going to count it complete, get the benefit of the doubt that we're going to see a little bounce here. Also today, this afternoon, we got Apple's earnings. Not earth-shattering, but not bad. Apple, yeah, that was good. Apple continues to report decent earnings. They're making money. iPhone was good sales, et cetera, et cetera. The shift to putting more of the business out of China, putting it into India, going well. I do find that the CEO, Tim Cook, did say a couple of statements that I thought like, wow, very elitist, but hey, you know, that's between the world and Tim Cook. But as earnings go, not bad. Not bad. They did not blow the doors off, but they sustained. But Tim Cook did say that, you know, going forward, we will be dealing with the macroeconomics. We will be dealing with and making adjustments to and according to what the market is doing. So they were well received. Stock right now is trading about $3.50 higher, but it's kind of bouncing around. It's not really getting back closer to that 175 level, which was the pop right after earnings. And it's not really drifting much below 168 right now. So it's kind of stuck in a little bit of a range. We'll see how the rest of the globe wants to interpret and swallow and take care of those particular earnings. In the meantime, the future is turning and beginning to head higher as we get the additional earnings reports from S&P companies and from Nasdaq component companies. So far, no real major disasters being reported that I can see thus far. But again, we're not witnessing the ES running away to the upside. Expectations now, if it is a wave 2, A, B, we're looking at a C wave, and then we have the following levels. But it also can be ABC A, ABC B, and then we get a C wave. So we're going to have to just kind of plan and look and see what the market is doing as it fits in the current pattern. Failure to kind of go up still leaves open that, again, the alternate that I'm looking at here and running them in conjunction with each other until one side takes over, and I can correctly then put it in, that if this is the 4, that this is only wave 1 of 5, and this could be a wave 2 of 5. So that would come more strongly into play if we really fail to start getting up into these levels. So we're going to have to wait on that, but that would be an alternate to counting this as wave 1 instead of maybe wave 1 of 5. And that would be 2 of 5, a 3 of 5, a 4 of 5, a 5 of 5, which could easily then break this market down and get it below 4,000 before we'd be putting this wave 1 in. Now, if it tends to do that, then I'm more than likely going to count these as the minutes and put that as a minor wave 1. Because remember, primary wave C is now in place, or now in force. And so we're in an intermediate A wave. What's inside that intermediate A wave? 5 waves of minor degree. So if we get all the way down into here, and I would put minor wave 1 there, then we're looking for a minor 2 and a minor 3. So right now, minute wave 1 here. The market will make it very clear, and I don't think it'll take very long before we get a clear reading on what is what. So for tomorrow, I'd be looking for this to continue to fill in minute wave 2, but again, looking for it to come up here. If we get back up into this level, but fail to get above 41.17, then it's more than likely going to be that we have wave 1 of 5, 2 of 5, and then we'll drop more precipitously. Over in the Nasdaq, what I wanted to also show, just going out to the daily here on the S&P, the developing negative picture. So here we had the close today. Here's the chart of Globex. It did close below. Actually, it did close just above, but it broke the 200 EMA. So what we've done all week is that we broke below the 4, the 8, the 20, the 50. And then today we dipped below the 200. It basically held, and you can see flat as a pancake, the SMA, EMA, very, very flat. But a continued break would push it down to 40.40, which is where the 200 SMA is sitting. So if we needed to, we would then revert. Instead of putting in fibs for a bounce, we would then be looking for additional downside. And those fibs, right now, we have 40.40, but we also have 40.46. We have 40.50. Those are all lining up to possibly provide a little bit of support. And more on that if and when it should occur. Moving over to the Nasdaq. Nasdaq continues with a little bit more complex internals here on what we got. And here again, I'm going to put that on the line chart. Open it up a little bit so we can take a peek. And again, we have 1, 2, and then 1, 2, 3, 4, 5. So there was more of a clear subdivided wave 3 versus the S&P, not quite as clear. And then we had a 4 and then the 5. Now, same deal in that, let me go back over. If this is going to be the wave 5 and then the completion of that minute 1, then I'm looking for this to start beginning to rally, which it is now, but rally with a little bit more strength, get itself above 13,142, where we have fib resistance, where we have the 50, which is at 13,145, the 200, which is at 13,154, and then start getting itself up into this zone, which is the most common fib retracements for a wave 2. And that would be 13,186 to 13,229 or 230. Can the market do that? Technically, absolutely. I think that if everybody catches fire and they're just now all still in tune, then yes, we can go up there, make those highs before we then turn and drop inside of a larger third wave. So same story, but not carrying as much capacity for possibility or even probability. And that would be that this is only wave 1 of 5, and then we have a wave 2. And that would bring us up to those lower levels, and then we get a turn down in a third of 5. And so we could also work out those fibs right now. I'm not really looking at it, but that's the alternate. And then we'd be looking for it to break 13,000. We have 2980, and then I believe we're going to have 2950, and so on coming off. We have some price points, and before we would get to that, and as in the S&P, should that occur, then I would be recounting this so that it's a minor wave 1 that we would be completing down in these areas, and not a minute wave 1. So this would revert up, and we'd be working at minute 1 up here, minute 2, minute 3, minute 4, and wherever this ended up as minute 5 and minor wave 1. And that still might be the case. Right now, I'm keeping it on the lower degree to give the market the opportunity to fill in those blanks as to how strong, this continued decline will get. Now, moving averages here on the hourly chart, we got the 50 crossing the 200. That kind of puts things right in place for basis in the Nasdaq, a continued decline. Because then we have the 20s gone below, the 2, 4, and the 8 are down below, and the 50. So it would be all in alignment. Once the 50 got below the 200 SMA at 13,123 right now, then we're in alignment in terms of the 200s on top, the 50, the 20, the 8, the 4. Then we're looking for that continuation to the downside. Now here on the daily chart, it's not quite as negative, but we had the same 1, 2, 3, 4. On the daily, we have the 50 here and the 200s here. So to get that negative confirmation from the Nasdaq, we need to see break and close below the 50, and then again with the 200s. So we're definitely looking for look closer to 12,300 before all of that would take place. So right now, I'm just going to continue to feel that we need to build on these. I believe we still have that potential for the rally, and it would be a wave 2 rally. Either way, either it's wave 2 of 5 or it's going to be wave 2 all on its own, and that would be an ABC. And here we have 13,186 to 13,229 would be our levels for fib 50% to 62%. Those are the most common for a second wave. And that's really about it. Again, the Apple earnings weren't all that stellar. I mean, they were stellar, but not necessarily that exciting in terms of trading. So, but the markets are continuing to move higher as they come back in. And again, that fits because we're looking for a pullback, an ABC pullback. And you can say they're not out there breaking away. They're just kind of walking it back up. So we'll see. Again, Goldbeck starting off a little bit light, and we can go over and check real quick. We have 8,000 within the first half hour for the S&P, and we only have 3,400 for the Nasdaq in the first half hour. Not horrible, but not gangbusters. So that is where I'm going to complete it. I probably could take a look. None of the other markets, we did have gold yesterday really kind of spike, and that was in the Globex session. Follow through was it that it came down, went up, and it looks like we might get that ABC, which would drive it below the lows at 2038. And probably, if I had to say, if I had my druthers, we're just going to take a look at what these fib extensions look like. So if we're looking for a C wave to complete whatever the wave pattern is here in gold, and that would be just a continuation of the upside. So it's either going to be a 2 or a 4. And that kind of so it might get down to 2039, but we need to break below there. And so we can go as low as 2021. We have 2031, 2035, 39, 41. So it's pretty tight. But wave C would be equal to wave A at 2021. And 618, which also works, come in at 2039. But we need to get below 2037, and therefore we have our next level at 2035. So everything seems to be on track and fitting. We'll see how this happens, and it likely would do it overnight. That's really going to finish it. The bond market continues to just hold and hang on. Not really making a great move in either direction right now. So that's going to need more time. So this is where I'm going to leave it for today. And our next update will be on Sunday, June. On Sunday, May the 7th.